Hello guys and girls, how you all doing? It's been a while. So today I'm just going to explain the XY, and then I'm going to go to the spells AUD USD, Euro New Zealand, Great British Pound Aussie, Great British Pound Swiss, and then gold as well. So I'm just going to give overall perspective of what I feel about the XY, and then we explain the rest. So without further ado, let's dive straight into it. So now we have the XY right here. I think last week was this momentum last week, and then I believe this week, early days week, market is going to accumulate some volume before we see the momentum begins to kick in. Probably the Tuesday London session, or maybe Wednesday London session. So um, we have we're here on the weekly on DXY, and then we have this value area right here. We have this value area. We came the first time, we didn't actually take out liquidities, right? We push back, but then what happens? We come back down, and then we start to push to the outside after liquidities has been grabbed around here, right? So if you look at this one now, the first inflection point will be right here. The second one, which will be probably our long-term target, will be around this high right here. Now, giving this context to explain this, as you can see, we have the gap, right? We have the gap towards this area, and we sold off. We didn't commit, and then price came back, still left a gap, right? And then it committed to the downside, came out, take out this liquidity, and now it's starting to push to the outside. Look at the momentum right here. So with this weekly momentum, we can tell that we are bullish right now, short-term bullish, right? Playing the range, we are short-term bullish, especially with this weekly momentum coming into play. Now, if we look at here on the daily, however, now we'll see this inflection point, or you can call it the value area, right? Because look, what happens here, price sold off, right? Price sold off, create this continuation, sold off, create these hook points, and then drop, and then take out this low right here, and now price is coming. Now because price has taken out this low, this is more like if you just go jump on to buy this trade, I think you might put yourself in a high risk position. However, if you still sell unnecessarily on this position, you still put yourself in a high risk position. So this is where you use discretion, and then you use your common sense to know, okay, you know what, I want a clear commitment to either side, or price giving me a deliberate price action for me to now take the trade. I'm not just going to take the trade for just taking the trade, or because I see a mini kind of continuation or reversal structure that I'm going to sell or buy it. We want solid confirmation before we can make decisions, right? Now, if you go to the 4 hour, what do we start to have? Look at the price action that we start to have towards this area. This is a corrective approach, right? Now, with this one, it could evolve into so many things, right? Now, we could have price action like this, where price comes a little bit down, come back up, and then create this territory structure, and then that will be a continuation. If we see this deliberate price action 4 hour giving us structure like this, and then we can now go to the 1 hour and look for retrace candle to take the trade, because at this position, if price is going to reverse, it's not going to give you this deliberate price action. This will kind of be a kind of price evolving from this corrective price action into this one. So with that saying, this now becomes the impulse, and then this now becomes the continuation to now head to the upside. Remember, we had a near miss, right? So now that will be what we initiated by for us. However, if we look at it right here, we can tell the last line in the sand for the buy will be here, right? So now our intention is to wait to see, okay, how does price react into this area, because if we had a break, if we have a break, and then price gave us a deliberate 1 hour structure, remember, I think this is a situation where we wait for 1 hour price action to actually make the decision. This is not the kind of situation you want to be going to the 15 minutes, right? We want 1 hour entry. Once, let's say for example, we now confirm the 1 hour flag like this, we can now go to 15 minutes and look for the entry, but we want the continuation, the pattern on 1 hour. So if we have something like this or something similar, then this is where we look for the sell, right? Because at this point we have a deliberate price action. However, if we have a two-touch continuation right here, I don't want to be taking a two-touch because a two-touch continuation could actually ended up doing something like this where you have a kind of a double bottom into this area and then that initiate the move to the upside, right? So what we want is a deliberate three-touch structure and a 1 hour retrace, which is why we need to be patient and then go for 1 hour. Look, if this is going to commit without us in this one, I can bet you once it drop a little bit, it's going to give us another structure continuation pattern, which is going to be smaller than this one, and then we can enter right here, which is more better because at this point it is more confirmed that you know what, we are heading to the downside. So this is where we exercise aggressive patience, right? Because you could ended up just jumping into trade and then you take unnecessary loss, and that's going to affect your mental. If there's anything that I've learned over the years, especially last year, will be patient, be aggressively patient, be willing to miss out on some positions because it is better than taking unnecessary losses. I would rather miss a position than take a loss that will affect my portfolio. And then whenever you see a trade that is good, you're now scared of taking it, and then you miss out on a good opportunity because of your irrational, reckless decisions, right? So it's better to wait and miss out on the trade because if I'm going to wait and then I don't get entry right here, I'm like, oh, you know what? This is like a bus. When one bus leaves the garage, another one comes. So if I miss this trade, another one is gonna come here or here or here. Look at the range that we have to play. So this is where we have to be patient and use our common sense, right? So now we go. So now with this AUD USD right here, um, if we go to the weekly, as you can see, so this is a range play as well. This is a range play, right? This is a range play where we look to play this range right here and this one right here, because look, when it comes, it take out this. Initially it gives a gap, it near misses it, it pushed down, near misses this one. What happened? It came back down, take out this, take out all the liquidities, and then begins to drop. Now we had a gap right here, so it is imperative that price comes back and then fill out these areas. So which is why I'm still kind of looking out for the sell-off, which now gives me perspective that there is a high probability that we might see DXY creating a continuation pattern to the upside. So because of this price action right here, so but we have to understand that DXY is going to dictate the moves of those spells, right? So but you have to trade what you see because of it's DXY. You don't want to be making your decision based on that. Sometimes you have to, but trading what we see and analyzing what we see, I think this is the best clue price is giving us, right? Now we have the area, we caught people on the wrong side of the market, and we begin to push to the downside. So we have the 1 2 3 drives, we have the more like a 1 2 3 finish. This is a beautiful price actions, and then we start to sell off. We create this 4 hour this hook point, daily hook point, and then this inflection point is an area we'll be focusing on because this is a area where we could potentially turn around right now. And then if we're going to sell this as well, will be the best area for us to look out for the sell-off, right? So with that being said, what are we looking at right here? So I am more looking at a price action, say like this, come back, give us a middle section, and then maybe come back up, give us this exhaustion, and then give us the retrace, and then we can see what we have. Something like this would be great, and then this would be a 1 hour entry as well. This will be a 1 hour entry. And once we see something like this, we have the middle section, we have the 1, 2, 3 into these hook points, and then this will be a very, this will be a very, very beautiful trade. So we are going to be, like I said, this is going to be a 1 hour entry, not a 4 hour, but then we can have probably around 20 pip SL around here. Let's call it 19, and then we're going to target this one, which is going to be 7%. Beautiful position. If we have this position, this should be my go-to, because this is a, I have backtested this type of trades and they have a very, very high strike rate. If I see something like this, I'll go all gun blazing, no doubt. So remember, we could also go up from here, but I'm rooting for the sales, right? So we have Euro Kiwi. Now on Euro Kiwi, this I had a trade on this one last week, so it's a beautiful setups as well. So Euro Kiwi, what do we have right here? As you can see, we have this inflection point or area value area. We had the near miss, and then we eventually get people caught on the wrong side. And this is more like a range play as well, right? So A to B, we have the impulse, this is the continuation, and then we are potentially looking for the move to the downside, right? So if we are going to sell off from here, where is the best area to do that? That will be here. As you can see, it leaves the clue. So now we are here, we tap that, we have the retrace, and then we begin to sell off. So now when we go to 4 hour, look what we see. Now this one is a bit tricky, but if you know what you know, then I think you're going to make the right decision here. Now we're just going to remove this ray line and then we'll put on a trend line there, because it's still what it is. It doesn't actually change anything. So we have the 1, 2, 3. Then we have this more like a middle section. So we have the 1, 2, 3. We have this more like a middle section. I initially got a trade right here. So now this looks more tricky. This is more like a imports correction continuation. If you are buying this if you are buying this here, you're not wrong to buy from there, because look, it is what it is. It gives a very good price action for the buy if you are dealing with this in isolation. But we have to look at the higher time frame and understand, okay, where are we coming from? Look, we're coming from this value area. Price move from one value area to another. We've taken out a value area, grab our liquidities, get people caught on the wrong side of the market, and now we had a near miss right to this area. So the best possible area for us to come in will be to the downside. Remember, we had a middle section right here. This is a complete pattern, a bit bigger, but more like an expanding, but it is what it is. Now, it looks more like this. If you are buying from here, I understand why, but like I said, you have to look at the higher time frame, the bigger picture. Now, if you look at these, essentially, we have these moves, which is around the 50% fib level. I mean, that is great. And then we kind of have something like this previously, right? And then we broke back inside, and then we had an insurance entry around here, which was the trade that I took myself last week. As you can see, we tap that, we near misses this area, we kind of tap it a little bit, and then we drop back, insurance entry around here. This was the trade, and then we sold off. Now when we sold off, what do we have? We're now creating a 1, 2 kind of 3 structures. Now, if we are going to go to the upside, I don't think we would have created this type of structure. You might say this is a little bit higher risk position because of this area here. But then, if we are going to go up, we're not going to form this kind of price action. As you can see, this is an impulse correction, and then when you look at this in isolation, this is just a little bit above the 50% range. We broke back inside. So if I'm going to take this position, I'm going to take it like this. I'm going to take it around the 50% right here. I'm going to have my SL just let's call it here, and then that will be great. By the time we move here 1.45, and I'm going to move to break even, and then I'll see what I get. You can actually have it around here. Actually, yeah, 24 pips is okay. By the time we got here, 2.7, and then 5%, and then when we go down, maybe to this point, will be 8%. So this is great as well. This is looking great. So now I think the bare minimum you might get tagged in, it might comes back here, and then you move to break even, and then if it's going to go up, it's probably going to do something like this, go up. Now we can pivot. If it gives us insurance entry, then we can capitalize on the trade regardless. So, but for now, I think there's high chance we'll be heading to the downside. So, if you can't afford to take this kind of trades, it's better for you to wait for another commitment, breaking out those areas, and then any continuation pattern below here will be your entry, a low risk entry that gives you kind of, a hedge against the risky side of the trade. We have this one right here. So I'm just going to explain because I don't want to spend too much time on this recording. So as you can see right here, we have this value area. We got caught people we caught people on the wrong side of the market, grabbing our liquidities in the 1 2 3 formation. We had the middle section. This is the complete pattern as well, and then we begin to sell off. Right now, we formed this continuation as well, and then we sold off, and then we came back. We created a hook point, an area right there. We create these areas. We tap that 1 2 3 hook point. We sold off again. Now, the only negative I see about this trade is this wick being thrown around here. So I think it's better for us to wait for price to fill out those areas. Once this area has been filled, any kind of, let's say for example, we fill out this area on 4 hour. Let's say the nice price action came and closes around here. We can now go down to 1 hour, and then we wait for our entry. So which means there's potential for us to see something like this again. And once we now come back down, we can now look for the entry. And then the good part is we might form something like this, where we have this internal 1 2 3 drive into that area. That is still what it is. Once we have that, any 1 hour retrace around here, that will be our entry. So which is great anyway. But we have to be wary about this hook point. But we don't need to overly concern ourselves about it, because if you want a bit more safety, you can wait for 1 hour and 4 hour retrace, or 4 hour high test candle. When you have 4 hour retrace, for example, you can now take it on the 50%, and then you'll definitely be in a fantastic position. Let's call it 21 pip will be fine. To the low here will be 4%. I mean, incredible. And then to the 90% will be around 13ish to 15ish%, and that's fantastic. 16ish, so that's great. So like I said, we have this one. Now we have this one right here. Now this one is a bit more tricky, because it's not coming from a value area, so to speak, but we can play what we're seeing right there. So we I mean, it's not the clearest price actions, to be honest, but we can see we have this price action, we have this area, we have the gap. This one take out this one take out this one, but still left the gap. Eventually we take out the gap, and then we start committing to the downside. So we are looking to play this range from here to here. So what we need now will be an insurance entry, something like this, something like this. So once we see an insurance entry like this, that will be our position right there. Once we see an insurance entry, that will be, let's call it 12. Then by the time we are here, will be 3.8, will be 6%, and then to the low right there. I mean, that's incredible. Like we have around 12% right there, 12.5, 12, call it 12, just under 13%, which is thing. So we're looking for insurance central around here. Be brief about this one because we will waste a lot of time already. So on the gold, gold. I mean, this is bullish. We have this price action. We break past two. We have the continuation. We have this, the third continuation. We broke past it. So what we need right here would be another continuation, because this is not looking like it's going to turn right now. We might create a kind of continuation like this, and then we'll continue the journey to the upside. So this is not looking like it's going to sell off any soon. So if there's anything, it's still going to be bullish. We look for continuation on a 4 hour, and then we navigate to 1 hour, and then we look for an entry right there. So guys and girls, that is all about that. So catch you on the next one.